Owning a home is the ultimate financial goal for many individuals. However, no part of the process is easy, not least of all paying off your mortgage month after month. And if you are struggling to keep up with your repayments, it's easy to feel like there's no way out. However, there is support out there for those who need it. The secret? The Support for Mortgage Interest Loan, or SMI, and in this video, we'll break down everything you need to know about it. So what exactly is the SMI? Simply put, it's a government loan designed to help people who are claiming certain benefits pay the interest on their mortgage. SMI is specifically for the interest part of your mortgage, not the capital. Understanding this distinction is absolutely crucial. You could be eligible if you're claiming any of these benefits: universal credit, pension credit, income-based job seekers allowance, income-related employment and support allowance, income support, which is currently being phased out. An SMI can help with interest on up to £200,000 of your mortgage or secured loan. If you're on pension credit, it's up to £100,000. However, it's important to note that it uses a standard interest rate, which might be different from your actual mortgage rate. For example, if you have £150,000 left on your mortgage, you could get an SMI loan worth £4,740 a year, or about £395 a month, based on an example interest rate of 16%. Interest rates may vary. Applying for an SMI is actually pretty straightforward. When you start claiming a qualifying benefit, you'll be asked if you need help with housing costs. If you do, you'll get a form to fill out. You'll need to know how much is left on your mortgage and what interest you're paying. Perhaps the most important thing to remember here is that an SMI is a loan, so you will need to pay it back with interest. Luckily, however, you can choose to pay it back when you sell your home or make voluntary repayments earlier. Some of the biggest pros and cons include: pros, you don't need a credit card. It doesn't affect your credit rating. It can be a real help if you're struggling. Cons, it's a loan, not a grant. There's interest to pay back. It might not cover all your mortgage interest. It's important to remember that an SMI isn't your only option if you're having trouble with your mortgage. You could also talk to your lender about a payment holiday, consider remortgaging, or look into other benefits you might be eligible for. So weigh up your options carefully and decide which suits your circumstances best. Ultimately, an SMI is by no means a perfect solution if you're finding it difficult to repay your mortgage. However, it is a solution and one that can help you get back on your feet financially, so it's worth considering if you are struggling. And for more information on SMIs, be sure to check out our full guide on the Afforda website.